Good morning. Good 11:30 a.m. to everybody. My name is Chris Thomas. I am joined by Micah Potashnik. Our firm is 40W Advisors, and we have the privilege to serve as the 401k consultants on your company's retirement plan. For those of you that have joined us before, you know we do these every month. For those of you that are new, welcome. This is our February financial wellness webinar, where we're going to be talking about financial planning in 2025. And we do this, this time of year. It's just kind of a reminder of things that are happening in the world around us, and think how it might impact our overall financial plans. And then because it's still the beginning of the year, we know people are maybe trying to jump on some good habits to improve their finances here in the new year. So we're going to spend a lot of time sharing some tools and resources with you that can help you get started with your planning and continue throughout the year. So from a just administrative and compliance standpoint, let me just reiterate that everything we talk about today is for information and educational purposes only. Nothing should be taken as personal financial advice to you. Secondly, just from an administrative standpoint, everybody's joined in listen-only mode. We encourage questions, comments, what have you. Please use the questions box that is on the meeting control panel, and that will that's where you can access the questions or the comments, the chat feature there. I'll try to monitor those on the side of my eye here. Micah, can you hear me okay?
I can hear you. Can you hear me?
I can. Yes, you're good. I was somebody on the line had mentioned that they weren't able to hear us, so I don't think it's I think it might be an issue on their end. So hopefully they can get that resolved. So let's go ahead and jump in and get started here. And here's the way we're going to attack this today. Again, we have 30 minutes. We got usually a lot to cram into these 30-minute sessions every month. So here's how this one breaks down. We're going to first just talk about things that we know. These are things that are laws, regulations in place that we can act upon or should know. Then we're going to break into probably what's on the mind of a lot of people right now, and that's just how should I digest all of the news, all of the headlines that I'm hearing about some of the current administration, the new Trump administration, and everything that's going on, potential changes and how that might impact your financial plan. And then, as I mentioned, we're going to spend a lot of time talking about planning, how to plan. This is intended to empower you and give you actionable ideas that you can take away from this 30-minute session. And we're going to spend that or really the biggest chunk of time probably towards the end, connecting you with some resources and giving you sort of some things to consider as you start planning for yourself. So let's start with what we do know. Okay, let's just stick to the basics here, and this is sort of an FYI. Every year the IRS updates the contribution limits for different types of tax preferred accounts, mainly your 401k plan, which you all have available to you through your employer, personal IRAs, Roth IRAs, personal Roth IRAs, and then health savings accounts that you might have available to you. So let's just talk about those quickly. As you can see on the screen, there's new limits for 2025. I should say that the new limits for the 401k, the IRA and Roth IRA limits stayed the same as last year. But for the 401k for this year, everybody can contribute up to $23,500. If you're age 50 or older, you can do an additional catch-up contribution, which now comes in two flavors. The catch-up contribution that applies to everybody age 50 and over is an additional contribution of $7,500. So that means if you're over age 50, you can contribute up to $31,000 in 2025 to your 401k plan. Now, the new rule that went into effect this year is called an enhanced catch-up contribution. I personally think this is just way too convoluted and difficult to communicate, but they didn't listen to me. So what the IRS and Department of Labor did is they initiated this enhanced catch-up contribution, which allows only those people who will be age 60, 61, 62, or 63 as of 12/31/2025 to contribute an additional, what is that? An additional amount of, that's tough math right now, $3,750. So your catch-up contribution, if you are age 60, 61, 62, or 63, your catch-up contribution is $11,250. So depending on your age, if you're under 50, you can do $23,500. If you're over 50, you can either do $31,000 or $34,750 into your 401k for this year. So the action item on that might be, if you are somebody that likes to maximize your 401k contributions every year, maybe you need to log in and you need to update your contribution rate to make sure that you're hitting those new higher levels. As I mentioned, the IRA and Roth IRA contribution rates are the same for this year as they were last year. And then if you contribute to a health savings account, your health savings account contribution limits have gone up a little bit. You can see what those are on the screen for individuals or families, depending on what your coverages are. So the action item is reconsider whether or not you need to increase your deferrals or your savings rates to these types of plans. Something else we'll talk about too is it's not too late to make contributions to your personal IRA or Roth IRA for 2024. So let's talk about that. We'll talk more about that here in a minute. And then finally, another new rule for this year, for 2025, is that if you're a part-time employee, you're now eligible for your employer's 401k plan if you've completed 500 hours of service in each of the last 2 consecutive years, and you're at least 21 years old. Again, that's another new rule that pertains to all 401k plans. So it might not pertain to you in particular, but maybe you have a spouse that is working part-time and historically has not been eligible for their 401k plan. They may be eligible for their 401k plan now. So moving on, and again, we're not going to, I promise this is the last busy table we're going to put in front of you for today. But I just want to quickly point out that unlike your 401k plan, your IRAs have eligibility rules. Now, a traditional IRA, you can make contributions pre-tax, where you get a tax deduction now, or after-tax. After-tax contributions to a traditional IRA, you don't get any tax deduction, but you're able to put the money into an IRA. We'll talk about an after-tax IRA strategy here in a minute. And everybody's eligible to contribute to an after-tax IRA. There's no income requirements or restrictions there. However, if you want to make contributions to an IRA on a pre-tax basis, there are some income limitations. And it also depends on whether you yourself are covered by a 401k plan, which all of you are. And so let's just talk there. Let's deal with this middle column. This middle column is to help you determine whether or not you're eligible to make a contribution to an IRA pre-tax based on the fact you personally are covered by a workplace 401k retirement plan. If your income, it's technically called your modified adjusted gross income. If your income is below $79,000 and you are filed as a single tax filer, you are able to make a fully deductible contribution. The contributions start to, your ability to make contributions starts to phase out between $79,000 and $89,000 of income, and then you're not able to do any pre-tax contribution if your income is over $89,000. And that's based upon your income in the year that you're making the contribution for. So you are still eligible to make a contribution to an IRA for 2024, as I mentioned earlier. So your ability to contribute to an IRA for 2024 is going to be based upon what your income was for 2024. Moving on, if you married filing jointly, as you can see, you can make a contribution even though you have a workplace plan, as long as your adjusted gross income is under $126,000 And then the phase out is between 126 and 146. And then if your income was over 146,000, you're not able to make a pre-tax contribution to an IRA. Now, if your spouse, if you have a spouse that's not covered by a workplace plan, they don't, maybe their employer doesn't offer a plan, or maybe they stay at home, you can see there's additional set of rules there that where they could make an IRA contribution for themselves if they meet these requirements. The other, switching to Roth IRA, are you eligible to make a Roth IRA contribution? So as you can see, there's different thresholds for that as well. And I'll just leave it there. There's a handout here on both pre-tax IRA and Roth contributions. There's a handout available to all of you that you can download, and it'll actually walk you through to help you figure out if you're able to make a pre-tax contribution to an IRA for both 2025 and 2024, and if you're eligible to do a Roth IRA contribution. So I mentioned that you can still make contributions to an IRA for 2024. You could do that potentially on a pre-tax basis if you qualify, or everyone would be able to do it on an after-tax basis. Mike is going to walk us through a common strategy that people use to make Roth IRA contributions, even though their income may exceed the level to where they qualify. So, Micah, you want to go ahead and explain that kind of process to us?
Yeah, absolutely. So, let's say you're in a situation where, you can't get a tax deduction for putting money in an IRA account because your income's, too high, and you are covered by an employer plan. And you say, well, I'd like then to make a Roth IRA contribution, but your income's also too high to make a direct contribution to a Roth IRA. So this is where something called the backdoor Roth IRA strategy can be utilized. And so the way this strategy works is you put money into your regular IRA account. Remember, regardless of your income level, everyone's always eligible to put money into a traditional IRA account. That money you're putting into a traditional IRA account does not give you any sort of tax break. It's called an after-tax IRA contribution. So the money you put in there, you would receive no tax deduction. What you're able to then do is, after contributing that money into your after-tax IRA, is you do what's called a Roth conversion, meaning you take that money that's in your IRA account and you convert it into a Roth IRA account. You move that money. So you'll need to have both a traditional IRA account and a Roth IRA account. You put call it your $7,000 contribution into your traditional IRA, and then you distribute that money and convert it from the traditional to the Roth. In doing so, you don't have to pay any taxes on that distribution. Usually when you take money from an IRA account, you pay taxes because it was pre-tax money going into that account. But because you're making an after-tax contribution, after-tax contributions are always fair game to move out of your IRA account, and you don't pay any taxes if you didn't get an initial tax break. Now, a couple important caveats to this. One, if you already have an IRA account and you make an after-tax contribution to your IRA account, so now more money's in there, you can't choose to then take out that specific after-tax contribution. There's something called the pro rata rule, meaning for every dollar you take out, it's going to be part, your after-tax contribution and part whatever currently in the IRA. So if you already have an IRA, the strategy might not make sense because there could be some tax consequences. But if you're in a situation where you don't currently have a traditional IRA because you never saw the benefit because you couldn't get a tax deduction, this is where the backdoor Roth can make a lot of sense.
There's also there's a handout for this as well that will walk you through. It's a flow chart, decision-making tree that will walk you through how you are able to, if a Roth conversion might be an advisable solution for you.
Correct. Now, and the other thing as well is, because for 2024 or for the 2044 tax year, you're still eligible to make a contribution. Theoretically, at this point in time, you could make up to, if you're under age 50, a $14,000 contribution, $7,000 for 2024, $7,000 for 2025. and do a full Roth conversion for all $14,000. So a pretty cool tax advantage tool you can utilize. Again, Roth IRAs, if you follow the rules, once money is in the Roth IRA account, that money grows tax deferred. And when you take the money out in retirement years, you don't pay any taxes on the distribution. So it enables for a lot of tax-free growth, and something that, if you were able to, certainly something that you can take advantage of.
Right. A Roth IRA is a great tax benefit that a lot of people don't qualify for, but this is a way that you can get some money into there. So we're going to switch gears now and start talking kind of about what's going on in the world right now, and just gonna, I'm not going to go into a whole lot of detail here, but I do want to at least acknowledge some of the things that are going on. Before I do that, I'm going to inject a quick poll here and see if you can. I want to get some feedback from those that are on the line here. Just how are you feeling about your finances heading into 2025? Give it a few more minutes for people to. All right. All right, I'm going to stop it there and just, there, I think you can see the results there. So we've got, it's good. The majority are feeling pretty confident. Only about 5% that are terrified. That's pretty good. Had a couple calls a day lately, just trying to answer questions for people that are feeling a little bit terrified. So very good. Thank you for that feedback. I always like to see kind of where people are coming from. It helps us kind of know kind of where to dive deepest into. So let's just talk about the elephant in the room. The elephant in the room is that we got a new administration in office now that is being very aggressive with the proposals that they frankly talked about during the entire campaign period. Now, I think a lot of the actions being taken, a lot of the proposals are happening at a faster pace than many had anticipated, and it's causing people to sit back and wonder, what the impact might be. So let's just talk about a few of those areas that you're going to hear about, and we'll just kind of explain how we see it, and what the potential impacts might be to you down the road. So we'll start with tax reform. So tax reform, 2025. In 2017, the Tax Cut and Jobs Act went into place, and that was a tax deduction, tax cuts that went into place starting 2017. Those tax cuts are set to expire after this 2025 year, meaning starting in next year, in 2026, the tax rates were going to revert back to what they were pre-2017. The only way that won't happen is if Congress approves to extend those 2017 tax cuts. We think that there's a good likelihood that those 2017 tax cuts will be extended because those 2017 tax cuts occurred during the first Trump term. However, what was discussed on the campaign trail and what is being presented in the tax bill to Congress currently are additional tax cuts, particularly the ones you've heard of, potentially not taxing Social Security, not taxing tips, not taxing overtime pay, and increasing the state and local tax deduction that we get on our tax returns for the amount that we pay to state taxes, charitable contributions, mortgage interest. But particularly state taxes, as of right now, are capped at $10,000. You don't get a tax deduction for anything over $10,000. So the proposals, what's included, all of those things that are added on to the 2017 tax cuts are very expensive when it comes to the federal budget. So therefore, we're kind of of the mindset that there's less of a likelihood that all of those things are going to go through. Maybe some of those things are approved in a watered down fashion, and maybe some are approved and some aren't. But we feel there's a pretty good likelihood that you're going to continue to operate under the same tax laws that we have in 2025, at least for the next few to several years. But you're going to hear a lot about it, because there's a bill in Congress right now to either approve these new changes and or to extend the current tax laws. The next thing are tariffs. Tariffs and overall trade policy with throughout the world. A few weeks ago, the news came out shortly after the new administration took office that there was going to be tariffs assessed against Mexico and Canada. That made a lot of news. About 3 hours after they were announced or after they went into effect, the Mexico tariffs were suspended for 30 days. And then a few hours later in the afternoon, the tariffs on Canada were suspended for 30 days as well. So it remains to be seen whether or not those tariffs will go into place. We'll know here in the next week or two when that 30-day period ends. Additional tariffs that were placed, a 10% tariff was placed on China, on all Chinese goods coming into the country, and a 20% tariff was placed on all steel and aluminum coming into the U.S., and that applies to all countries importing steel and aluminum into the U.S. So that's just reporting the news of what you may have already read, you may have already heard. The question becomes, how is that going to impact you? Look, tariffs could impact, the prices that we pay for goods if the increased cost is passed on to us as consumers. And an increase in goods is inflation, and that brings us kind of to the next point. Inflation is another topic that you are going to hear a lot about, and inflation is simply, are the prices that we pay for the things that we use going to continue to rise at a higher level than they have historically? That's what's concerning for inflation. We've seen inflation dip down some last year, but then we've seen it kind of creep back up a little bit right now, which has people concerned. If inflation remains high, then that has an impact on, potentially has an impact on interest rates. It means interest rates can potentially remain higher for longer. Interest rates, that has an impact on our borrowing cost for things like mortgages, credit cards, car loans, what have you. So again, these are things, the point I want to make with this is that we do not know what the outcome of any of these things are going to be definitively on our personal finances. Can't plan for them because we don't know what the impacts. We don't know which policies and regulations are going to go into effect, are actually going to go into effect, and we ultimately don't know what that impact of those policies and regulations are going to be on the overall economy. Now, the fourth bullet point is something that maybe is a little bit more of a direct impact potentially to those of us that are directly or indirectly very employed by, or a big part of our employment comes from the government. We're sitting here in Maryland right now. Mike is in Virginia. The DC, Virginia, Maryland area is obviously very dependent on federal workers. I think over 20% of DC area residents are employed by the federal government. So the layoffs, that are occurring hit very close to home, and they could be hitting very close to home for you if your business is in the government contracting, or if your spouse is employed, spouse is employed by the federal government. So these are the things that you probably should, if you are potentially impacted by the layoffs or budget cuts, then these are things that you probably do want to at least prepare for and at least know how you might handle them. So the moral of the story here is focus on what you can control, and what you can control is how you are prepared to weather the uncertainty in an uncertain environment. So that's really what financial planning is all about. So and we want to help you now start the financial plan. And we're going to run over a few minutes, so I apologize. But I want to go ahead and I want to just, Micah, financial planning is all about helping you feel more secure about where you are now and secure that you have a plan for uncertainty in the future ahead. So Micah, talk to us about just financial planning in general, what the process is, and then we're going to share with you some tools that are available to you right after this.
Yeah, right. So, again, in order to have any sort of, plan in place, right? A lot of times we start setting goals for ourselves. We want to retire at age 50. We want to go buy a house. We want to do all those things. And when it comes to financial planning, right, it's setting yourself up in a position to achieve those goals. And that's what we're here to do is to help, and we have tools and resources to help guide you on that path. But one of the first steps that's really, really important that's often sort of missed in the process of setting and trying to achieve goals is getting yourself organized, right? Understanding where you're at today, understanding what your net worth is, what are your assets, what are your liabilities, are you putting together a budget, what does your income look like, where's that money going, all those sorts of things. And through our portal that we'll show you all in a couple minutes here, it's a great way to keep yourself organized, understanding your investments, how that's allocated as well. And so once you understand how you're organized, that's when you can start thinking about, well, where ultimately do you want to go? What are your goals? What are your objectives? Do you have any specific fears in place that you want to make sure is covered? Do you have an appropriate amount of emergency funds in the event something unforeseen happens? And then from there, you can start actually putting together a plan of action, figuring out, how do I save those couple extra $100 a month? Am I building up that emergency fund? Am I maximizing use of my IRA account, my back to Roth accounts, all those things? And then from there, we can start putting that plan into action. And over time, you're always going to be monitoring those things. Again, life changes. Each year is always going to be different. But through the financial plan, you set those goals, work to achieve those goals, and then monitor and reassess along the way. So that's a very sort of high-level overview. Chris, I'll turn it back over to you to sort of get into.
Yeah, let's start with step one. This is the beginning of the year. We want you to hang with us all year, and we're going to continue through these meetings and other and one-on-one meetings that if you're interested in having with us, we're going to help you figure out. We're going to provide you tools, and we're going to help you execute on those steps that Micah just went over with you. So I want to highlight two tools here for you that are available to all of you as part of your company's financial wellness program that we provide for the work that we do for the company. These are personal tools that you can take advantage of. First one is our portal that Micah mentioned. This portal is a personal financial website that you can set up to aggregate all of your accounts in one place. So you have a clear, easy way to view your entire financial picture. It allows you to run calculators. It allows you to monitor it. You can run reports. I'm going to dive in there. I'm going to show you that calculator here in a minute. The second thing we know a lot of people right now, in addition to feeling concerned about what, where they might be, concerned about their investments and what might happen in the stock market or with your 401k portfolio, amongst all the uncertainty that we're kind of being fed through the media and everything else right now. So to do this, I encourage you to check in, figure out what we use a tool that it'll help us. We'll assign a risk score to you. Your risk score is how comfortable you are with downside, seeing downside, the downside of your portfolio to achieve greater gains. So how much of a potential with decline in your portfolio can you withstand before you kind of get overly worried about it? So what we'll do is we'll assign you a risk score based on a questionnaire. You can take that questionnaire you can use the QR scan here from your phone, and it'll take you directly to the questionnaire. And then what we'll do is we'll send a report back to you that compares your 401k portfolio allocation to what your current risk score is. So you can see that if your risk score is a 30 and your portfolio is a 70, well, maybe your portfolio is a little more aggressive than what you're comfortable with, and we can, maybe it's time to check in and to do a reallocation of your account. So that's the risk score. Again, you can use that QR code. There's also a handout that has links to request access to both of these. So let me now dive in and show you the portal that's available to you. This is what the portal will look like when you log in. It won't look like this initially when you log in because we won't have your information right away. But this is what it'll look like after you're able to populate information. And don't worry about these net worth or investment figures. That's just whatever the sample client here is, what they have in there. But what I want to highlight, as I mentioned, getting organized is step number one. So what this tool will do will help you aggregate all of your accounts, your 401k account, maybe a spouse's 401k account, personal IRAs you might have, checking accounts, savings accounts, your mortgage. Everything can be stored here. All the data can be stored here so that you can always in real time see where, what your overall financial picture is. So that's the organizer feature. And to do that, the first thing you do is just go, you can start adding an account, you click add account, and then you can say, yes, I have an online login to this account. And let's just say you were, Bank of America is where you bank. You type in Bank of America, you click on the Bank of America link. It'll walk you through the process of setting up a secure link between Bank of America and the portal. No transactions occur on the portal. It's simply a reporting and a data aggregator to get your account values. This will refresh as long as the links stay live. It'll refresh every evening so that you'll always have a real-time view. The second thing is, once you have things organized, the second step of our process is assess. So through the workshop function of the portal, you can go and you can get answers to questions about how you're invested. You can see if you're prepared for retirement, if you're saving enough for retirement. You can see if you have enough life insurance protection for your family. You can run calculators on just seeing if you're saving enough for college. So there's a whole lot of things you can do here to just kind of do that assessment to see where you are currently in relation to where you want to be. I'll just quickly show you the retirement calculator. Again, so what it shows you is you provide what your retirement ages are, what your yearly expenses are, how much you're currently saving, or how much you have saved currently, and that'll pull in from the data that you link here. You'll report what you're saving on a monthly basis to your 401k plans or elsewhere, and then you'll say how much money you want in retirement. And then this will just be a good kind of rough calculator to show you exactly, whether or not you're on pace to have your entire retirement funded or not. So that's the workshop. The spending feature is a really cool way for you to monitor and look at where all of your spending is going. So what this will do is, if you have your spending accounts linked, it will try to categorize your spending based on your transactions and report back to you the areas where you're spending. There's other tools that do this, like you might have it done for one credit card, but not your other accounts. The cool thing about this is it'll do everything. It'll do all your spending accounts at once. The category, it's not always great at categorizing things, so it's got a really intuitive way for you to go in and correct the categorizations of your transactions. And then what I think is we use a lot here is that you can go and you can look over time to see, what your spending was in the prior 6 months or what have you. So it really allows you to see what your spending trends are. You can use those spending trends to then, if you choose to create a budget. So you may see, I see that I'm spending, entertainment, $500 a month, but I only want to budget $200 for that. So you can go, you can customize a budget to yourself. And what the system will do is once you get, 75, 80% of the way towards your monthly budgeted amount, it'll send you a little email just saying, hey, you've already spent, you budgeted, $500 a month for dining out, and you've already spent, you spent $400 so far, and it's, February 20th. It just gives you a heads up, just another way to kind of help you stay engaged throughout the process. The investment section is going to allow you just to kind of see how you're invested across all of your accounts, rather than looking at each of your accounts in an isolated bucket. The vault is a place where you can store secure documents, tax returns, wills, things like that can be stored here in the vault. And then you can run in real time, you'll be able to run reports so you can see your own personal net worth statement, that as long as you have your links are active and you have your information in there, you can get a really accurate net worth statement to see kind of where you're currently at. There's a lot of other reports that you can access as well, but the net worth statement and balance sheets are really the most popular. So that is the portal. We think it's a really valuable tool. It's something that's made available to all of you, again, because of, through the financial wellness program that we help facilitate for your company. I'm going to stop sharing that screen now, and I'm just going to remind you that if you want access to this, simply email us, or in the handout that's available, you will see a handout that says financial wellness tools. The handout looks like this. There's clickable links in here where if you click on this handout, you can request access, and we will send you an email where you can set up your own secure username and password so you can start working with your portal. Same thing with the risk score that I mentioned earlier. You can click on this handout to be taken to the risk questionnaire, or you can use the QR code. We'll take this information, and within a couple of days, we'll send you a report back comparing your risk score to your 401k portfolios. And then finally, as part of the financial wellness too, you have access to me, Micah, or other advisors here, where we can just talk one-on-one about anything that is you have going on that you're concerned about. You can click here to get on our schedule for a 30-minute meeting. Typically meet via Zoom. The time is yours to talk about anything that is on your mind that you want to talk about. So with that, let me go back into the presentation here and just wrap up. I want to just, Micah, anything else that you have to add?
No, I mean, I think, the ability to keep yourself organized, I think, is so paramount across the board. And this is a great way to take everything within your financial life and put it into a singular location where you get real-time, updates and stored data and all that. So it's a very powerful portal that, as Chris said, you all have access to and should take advantage of.
Yeah, and just to reiterate, because the question came in, the portal is only for reporting values. There is no transactions available between your accounts that you link and the portal. There's security protocols that we can send to you as well if you're concerned about the security and the encryption of everything that's there. So again, thank you for your time today. We ran over, I don't know, sometimes we nail it in 30 minutes, sometimes we don't. We think this is an exciting topic because I really wanted to make sure you got connected with the tools. We're going to continue to build on these tools in future webinars. So I just want to point out that next month, we're going to dive deeper into the tool, and we're going to dive deeper into planning in general. And that's Thursday, March 20th, same time, 11:30. You can access these, you'll get emails from your employer, but you can also access all of our events at 40workplace.com. It's a website where we post all of our future events and registration links, along with access to some of these tools. And then April 17th, we're going to take a break from financial planning, talk about investments, and then circle back to financial planning in May, when we'll talk about the different strategies for planning for the very kind of intimidating expense of college and education for children. So thank you for your time. Don't forget the handouts that are available. Don't forget to reach out to us with any questions, and wish you the best.